This is a Forex Preview. Thank you for joining us at XM.com. We'll be looking at U.S. data coming up this week. The Q4 GDP is out on Thursday, while on Friday, we'll be getting the Fed's favorite inflation metric, the PCE price index. I'm Cristina Marujos. Joining me today is our lead investment analyst, Rafi Boyajian. Rafi, there are growing worries that the U.S. economy is headed for a recession. Do you think the data out this week will reflect this? And could the data possibly affect the Fed and its decision next week?
Well, Christina, I think we're probably going to get a mixed set of data on Thursday and Friday. So we're going to see some positives and we're probably going to see some negatives as well. So like you said, there are growing concerns that the US economy could be headed towards a recession. We just had the flash PMIs, which although there was slight improvement over December, in January, they still showed that, the US economy is in danger zone, but we're not yet in that situation where we're seeing a broad-based decline. For example, durable goods orders for December are expected to have risen by 2.5% month on month. And GDP numbers for the fourth quarter as a whole should be fairly solid. We're expecting annualized growth of 2.6%. But then again, if you look at what was happening towards the end of 2022, we did see quite a dramatic deterioration in consumer spending. The retail sales numbers that we had already were pretty bad. And that's why there's going to be a lot of focus on the personal income and spending data out on Friday. We're expecting to see personal consumption to have declined by 0.1% in December, personal income to have risen by 0.2%, which is half the rate of the prior month. And of course, the other data that comes with these numbers is the core PCE price index, which of course is the measure of inflation that the Fed puts more focus on. Now, core PCE price index had moderated, but it had kind of been hovering around 4.5%. We haven't really, there were some worries that it might pick up again, but we should see the downtrend in the core PCE price index to resume. It should fall from 4.7 to 4.4%. So if we were to get any bad or worrying numbers in terms of personal spending, then a drop in the core PC figure should help kind of offset any potential gloom, because it would mean that the US is making yet more progress in terms of getting inflation down.
And now let's turn to the market reaction. The dollar hasn't been having a very good time lately, and although it's been a bit steadier this week, it still remains under pressure. So how could it perform from the data?
Well, the dollar does remain under pressure, and the reason for that is that now we've reached a point where investors are re-evaluating the growth potential of the major economies. So not that long ago, we were looking at a very robust US economy, which would probably avoid recession. And we were seeing red flags in Europe from the energy crisis and in China from the lockdowns. So the energy crisis isn't turning out to be so bad this winter. And China has lifted its COVID restrictions, so it's in the reopening phase. So things are looking up elsewhere, whereas in the US, the more recent data has been somewhat weaker than expected. And the Fed, of course, is also maintaining its hawkish stance. So that adjustment in terms of the comparative performance between the major economies, that's really put downside pressure on the US dollar. Now, I don't think the next week's data is going to change that picture. And of course, we have to remember that we've got the Fed decision coming up on February the 1st. So I think investors will probably hold out for that decision before making major changes to their positions. But nevertheless, we could see some intraday volatility, particularly if there are any surprises in the personal consumption and the core PCE data.
Rafi, thanks so much. And thank you for joining us here at XM.com.